Hello everyone, I hope that you're doing well. Welcome to the first lecture of the Uncensored series. The Uncensored series being the series in which you are given the opportunity to watch over my shoulder. Here we are on the hourly chart of ES for a second, and what I want you to see is the following. I want you to see how we took out sell-side liquidity right here on Tuesday, yesterday with the news, and we ran up higher during the afternoon session. Then CPI was utilized right here for repricing higher. We have seen SMT with Nasdaq on the lows take place. Therefore, I'll be looking at Nasdaq for longs. Nasdaq being the market I want to trade for longs. Here we are on the Nasdaq chart, and let me just get rid of all of these annotations. And as you can see, our buy side liquidity target has been reached, so therefore a retracement can be anticipated like we're seeing right now. What I will be looking for, I will be looking for the following. I'll be looking for the 10 to 11 hourly candle to reprice higher, drawing towards the buy side liquidity above this high, and eventually towards the buy side liquidity right here. You can go to your daily charts and see what that high is. This is going to be a very raw series, so bear that in mind whilst listening to me speak, whilst viewing my charts. I'm not going to make any real edits in here. The reason why I will not be making any real edits is simply due to the fact that they aren't required. If I, for example, see nothing yet and I need to wait, then what I will do is I will just walk away and I will pause the recording until something of interest occurs. Because the thing is, everything is so time-based when it comes to the way that I am looking at these markets. I don't really, have to sit in front of the charts the whole session. I simply look at specific times of interest, and when those times of interest arrive, then I'm looking at the markets from that. So what we know is we know that there's SMT right here that occurred prior to the CPI release, or during the CPI release, I should say, which set up this big green candle higher. And therefore, I'm anticipating that we're going to leave these relatively equal lows on Nasdaq intact, and that we're just going to continue towards buy side liquidity. What I'm now going to do is the following. I'm going to zoom in. One more thing I want to check on the hourly chart. It's the following. Yeah. Okay, we might not even see the 10 o'clock candle reprice into this BC that's getting created, simply due to the fact that we have already traded into this BC lower here, and we have seen SMT forming that. So if it's a very bullish market, we're just going to see the 10 o'clock candle reprice to the upside. It's just real-time market data, as you know. No hindsight bullshit over here. I will be looking for this CB2 function as an inversion value gap to send price flying. Let me just go full screen. The reason why I'm always on full screen is simply due to the fact that I really enjoy looking at price through full screen. I am not a fan of keeping it like this, simply because you can see the markets move, etc. on the side and all of that stuff. Because look, when you have it like this, your screen is not only smaller, but you also see the markets on the right here. You see everything on the bottom here. You see all these drawings on the left. I just prefer to see only the chart. That's the only thing I quite frankly care about. I'm looking for an imbalance to get created right here, a BC. And if that BC forms, that's a confirmation to me that we can look to enter long. That right there is my entry, with my stop being below it, right here, targeting this buy side equity up here. Just want to have this on the left side of the chart. I'm anticipating big green candles to come. And I don't want you to be looking at the P&L. I want you to simply be looking at how the candles are delivering, because that's the only thing that matters. The P&L is just there to showcase, first of all, that I'm capable of doing this on the live account. Lately, some people have me thinking that all I can do is demo trade, all I can do is paper trade, because they see this UI and they think, oh, this is simply the paper trading tool of TradingView. Well, you just seen that this is an AMP Live account, and an AMP Live account, of course, is with a regulated broker in America, and there's no way that they would allow for any sort of manipulation to occur with their broker. It's that simple. And the thing is that the majority of people have never connected with TradingView through a like a real person broker. So it means they've only connected with TradingView mainly through, for example, TraderFate. And TraderFate has, of course, a different UI when it comes to the orders executing. But when you would, for example, connect with M Futures or Wenda, you actually have the same interface as the paper trading tool. And the reason why I'm recording this as well is simply because I have, of course, recently recorded or released a lecture in which I shared my thoughts when it comes to the market maker models and time cycles. And for this trade, we're also applying time cycles, by the way. Reason why we're applying time cycles is because of this sell side liquidity that has been taken out right here. It's support and sell side liquidity. So that sell side liquidity was purged. And now I'm monitoring to see if we will draw towards that buy side liquidity. I do not want to see the market trade below this low again. So in my mind, my stop is already basically trailed at break even. And what I'm monitoring to see is how we are going to expand to the upside. The reason why I'm anticipating an expansion to the upside is because of the fact that we are seeing an AMD fractal play out. Accumulation, manipulation, distribution occurring. Where we see accumulation occur right here. Manipulation to the downside. And now I'm anticipating distribution to the upside. And the fact that we displaced above this CB on the left side of the curve, create this BC, retraced into it at the right time, boom. Now I'm anticipating that distribution to the upside to occur. If that distribution would not come, then I want to be out of my position. 930 opening price has just been traded above. It's not a real significant displacement just yet. And this is a price level, of course, where price can hang around for a bit. There's a cracking correlation at the highs with ES when it comes to these highs. And the reason why I'm mentioning that is, of course, because of the fact that this SMT cracking correlation formed after the 930 opening. However, because I have a bullish bias, because I'm anticipating higher prices, I'm not putting that much weight on it. I'm not putting that much emphasis on it. And therefore I'm anticipating this to be a false SMT, false cracking correlation. However, I'm mindful of it, and I know that if we do not see displacement to the upside soon, where we're seeing the market begin to expand, this could potentially turn into an ugly morning session, but so far I'm liking what I'm seeing. So I'm just going to relax at this stage, drink some water. So I apologize if you hear me if you hear me drink my bottle of water. I'm telling you, this series is going to be very raw, and yeah, you just gotta deal with it. This is the closest thing I will ever do to live streaming or such. I am currently not at the place mentally, I think, where I could handle training in front of an audience. Maybe I will get there one day, but remember, I'm just 18 years old. I'm still very young. I'm just a young man. And because it is the case, I still need to basically develop psychologically. And I know where my boundaries are, and I know what could potentially cause me to basically experience fears or stuff like that. And that's why I'm saying just recognize where you think a limitation of yourself is and just slowly try and work towards the limitation. I'm not saying I will never do live streams. However, for the upcoming period, this is the only thing I will do when it comes to you being able to watch closely over my shoulder. And I think this is a very good way to learn because you're able to really get access to my internal dialogue whilst looking at the markets. So far, I'm liking what I'm seeing in the markets. I'm also going to take a look at Dow Jones. Dow Jones is very ugly when it comes to the intermarket relationship. Dow Jones took out this high right here, and it didn't take out the lows right here, which is signaling strength on the Dow. However, I'm anticipating higher prices. I will take 2 contracts off at this high. The reason why is because of the fact that there's, of course, a previous cycle high. Previous cycle high being the high of 830 to 10. And therefore, that's an important reference point, of course, to us. So therefore, I will do that. Let me just annotate the cycles as well. I already mentioned, yeah, we're using time cycles theory as a POI right here. Reason why we're using time cycles theory as a POI is due to the following. This low right here is an important low. Reason why it's an important low is if you look to this delivery right here, it's the low that's formed after the CPI release to the upside. And this low is basically the low that began this consolidation. We then manipulated below it, and like I described, this is where I'm anticipating distribution to occur if it's going to occur. We have this BC right here that the market might want to revisit. So that's something to be mindful of. Preferably, I want to see this gap right here remain unfilled. So I'm just going to annotate that. However, I know it's still possible due to the slowness of the delivery right now. But I'm monitoring deeply to see how we're reacting off that 930 opening price. This down close candle is a candle that I preferably want to see function as support on price. I really don't like that color. Let me just change it. Trail my stop already. At this point, my stop is better than break even. And this is, of course, a nice feeling to be in. The reason why it's a nice position to be in is because there's no risk anymore on this trade. The risk is already removed, and the reason why my risk can be removed is because if the market is going to deliver like I anticipated going to deliver to the upside, then it would never fall back all the way below this low again. Then it will just deliver to the upside. And what I want you to take away is how I basically looked at this delivery and recognized, okay, we might even see the 10 o'clock hour just be very bullish simply due to the fact that we might see an hourly breakaway gap. And if we see an hourly breakaway gap form, okay, then we have a different scenario on our hands, and then we could potentially see a very bullish day today. So what I will be doing is I will be taking off 2 contracts right here at the previous cycle high. And from there on, I'm going to see how long we can leave it run. I don't know if I want to record that whole part if it would occur, but we will see. If we move to the 5-minute chart quickly, we can see that an imbalance formed. So we might see the market want to retrace into that imbalance. Let me just annotate, preferably if unfilled, right here. Make it a bit smaller. And now the market is retracing into this imbalance. I do not want to see it displace outside of it. If it would displace outside of it, then it would mean my idea would be invalidated. And then I would walk away. My displacement level being, of course, here. Let me just zoom in. Right here. Being this candle's go. So what I'm liking from this delivery so far is that the market is closing inside of this down close candle. We are not displacing outside of it. We just stepped into this BC here, but we haven't displaced outside of that down close candle. If this was not the delivery post CPI, meaning if this was not, let's say, the delivery that occurred after the CPI event, and this was just your average normal day, then I would pyramid right here. And the reason why I would pyramid, why I would increase the risk, is due to the fact that this is our lowest supply then, first stage of accumulation. The next retracement that will occur, if it will occur, will be our, of course, our reaccumulation phase, our silver bullet, so to say. But I'm liking this reaction so far. I'm just monitoring to see if ES will follow along. Again, apologies for not being able to record all my screens. I just have my laptop in front of me, which is recording. But besides that, you're just going to have to accept that. If you want to, of course, look at the intermarket relationship like I'm looking at it, then I would highly advise you to just take a look at the chart yourself. What I'm seeing is that ES has created a CB that it's seeming to respect. However, that CB is not a very significant CB, but it might have some trouble with breaking through that. Mentally, I'm preparing myself to get stopped out here at break even, but that's something I'm just monitoring to see, because we're not displacing to the upside as aggressive as I would want to see that displacement occur. And because we're not doing so, I know that's either going to take a bit more time before the displacement to the upside occurs. But the moment that we would see displacement above this high right here, then I'm anticipating that we're just going to see speed and velocity towards the target and move from there. But again, as long as we do not displace to the downside, this is what I'm looking for. This is what I'm monitoring. And let's just see. Oh, by the way, fun fact. I know some of you probably already clicked off because you're like, why is he talking so much? If you take a look at the reversal price, I didn't mention this initially. I'm sorry. I'm such a bad teacher. I I didn't mention the most important thing. My mind just immediately goes through it when I view the charts. But take a look at the price graph I'm currently hovering over, 18,450. That's of course a rather significant price level because it's the equilibrium of the current range that we're in. And the reason why I wanted to see this BC leave unfilled is because of the fact that it's actually the 18,500. So right now the range that we're working in is 18,500 to 18,600, and therefore equilibrium is just resting above the buy side liquidity pool that I'm targeting, of course, at 18,550. And that's something for you to monitor. So as long as we do not displace below that 18,500 level again, or anymore, I should say, then I'm anticipating that we're slowly going to draw towards the opposite side of that range, which is of course first of all equilibrium. That's my first target, and secondly, I'm going to target the outer side of the range, but maybe even higher. But so far, I'm very happy with this reaction. I'm already setting myself up to maybe take a partial soon. But at this point, this row is very important. The reason why this row is very important is because we displace to the upside above this high. And therefore, we never want to see the market displace below this row again if we're going to be bullish. Notice that we did not reach the low of this BC. We tapped into it, but notice that the low did not form at the low of the BC. Nasdaq is leading the pack. ES is not trading above the high yet. In fact, ES hasn't even expanded to the upside just yet as aggressively as Nasdaq. However, it seems to be catching up soon. But that's how I'm looking at the intermarket relationship. I'm monitoring to see if both markets will catch up. This CB here has been traded into many times. Right here. It's traded into it here, trade into it here. So therefore, the moment we displace above it, I'm anticipating it to function as a future inversion for value gap. If we would not displace above it, but instead fall over, roll over, and displace below this row, then I would lose interest in this whole morning session and would walk away. Because then we're likely to see the market just range inside of the range from this row to this high. I'm listening to some music. I don't know if you can hear it, but just chilling out. Because the thing is, like, the moment that price is hanging around entry, I'm always monitoring if the market is following along with my idea or not. And it's something I continuously do unless I see or until I see the market really show signs of, yeah, I'm following along with your ideas, Zeuss, you can chill out. And the moment I can chill out, it's just fun because then I know, okay, it's likely to reach my Tron liquidity. And if it's not following along, meaning if I need to do something, then I know, okay, well, let's monitor it actively. And like I mentioned, this would have been a regular pyramid if this was not the day post CPI. What I see now, by the way, is that ES already took out the high of the 830 candle, whilst Nasdaq did not yet. So I'm monitoring actively how this candle is closing. I'm just going to see. If we would leave the price range of the inversion value gap again, meaning if we would trade below it, I would take a partial. And it's never wrong to take partials. Damn, I didn't even recognize that. Good stuff that I looked at the highs as well for... yeah, I'm taking a partial. Just to cover fees and such, like I mentioned, if we would not displace above this inversion value gap right here, then things could get messy. And you can't go broke taking a partial. Simple as that. And I'm just basically, how to say it? I'm preparing myself for a potential scenario in which we would not see a range expansion occur, but instead a consolidation post CPI. And the reason why is because ES already took out this high, whilst Nasdaq did not yet. Look, by itself, it isn't something that is a concern. However, when we're in profit, look, if the market would roll over right here, if it would form a high and then fall back into this range, and I would be forced to eventually trail my stop to this level and it would get reached, I would beat myself up about it. Because I would beat myself up about the fact that I recognized a potential sign of, okay, maybe we're not going to draw towards external range liquidity. And if that would be the case, then I would basically be upset with myself throughout the whole day. So therefore, it's better to take a good partial in a premium array, in the CB, than risk that scenario of occurring. The moment we close outside of the CB like we've done now, I want to see the market use this CB as an inversion value gap to send price higher. By the way, do you think I care about the difference of taking a partial here compared to here? Surely the difference is minor. However, the way I look at it is simply through the lens of, okay, if I would recognize the signs of, okay, maybe this is going to happen, why would I then take the risk of that occurring? You get me? And that's a way of being okay with my own analysis. I'm accepting it. I'm okay with the way that I look at the market's life. In hindsight, it's very easy to say, yeah, this and this and this occurs. However, in the moment, the decisions that you make then matter. If the market would displace below this inversion value gap, I would completely get out of my whole position, by the way. If it would not function as an inversion value gap, I would get out. And the exact level that I would utilize as an invalidation level would be around this area. I would take another contract off then, and then the remainder would just be left open until it would reach the full invalidation. I'm monitoring specifically this candle right here. The reason why I'm monitoring that candle is of course because that candle is the high that formed after 9:30. That's another partial. Again, it's that cracking correlation at the highs that's very significant. Stop is being trailed to this low. Monitoring specifically how this candle will close. If it will close inside of the inversion value gap price range, then we could potentially still see higher prices occur. However, like I mentioned, I'm not a fan of that cracking correlation on the highs. It's definitely not something you want to see, especially after CPI. Reason why you don't want to see that after CPI is because the delivery after CPI was so explosive to the upside. It's that it's a scenario in which, okay, well, we have already delivered a large range. It could potentially now chop around and range for the remainder of the morning session. And that's just something I'm monitoring actively when I'm looking at a market like this. So far, I'm very happy with the fact that we did not close outside the price range of the inversion value gap. However, this is not the type of delivery you want to see when we displace above an inversion value gap, have SMT on the highs, reach the close slash wick slash high, I should say, of such a candle. Because if this was a very bullish market, it would have just boom, retraced, there it went. It can still occur, of course. However, I would not be surprised if we would just see range-bound price action for the remainder of the session if we would close heavily outside the inversion value gap. The candle I'm now monitoring is this candle. I'm just going to annotate it for you. Final chance. This is all way too colorful right now for my eyes. Let me see if I can solve it. I just remove this and I'll use this. My bad. This is what you get when viewing me act live in a raw manner. Because I already took partials, of course, inside the premium CB price range, I will be actively monitoring how the market would trade above this high if it would manage to get above that high. If it wouldn't manage to get above that high and I would get hit, or my trail stop would get hit, then that's that. And then I would just move away. But the reason why I'm actively going to monitor how the market will trade, if it would manage to get towards that high, is because of the fact that I, of course, only have one contract left on this position, on this account right here. And therefore, I need to see whether or not we're going to see a large range day continuation occur, or if we're going to roll over. But so far, the market is having some struggles right here with this small CB that formed. So far, the reaction of that red box is rather good. However, it's 10:30 or 10:30 has passed. So I'm actively going to monitor to see how we will deliver after that now. This is a very ugly closure outside of that CB's price range, by the way. If everything would be technically perfect, we would have never displaced outside of it. But hey, shit happens. I say my entry was rather good, rather perfect. And that's the thing with my exits. Like, I know how to recognize reversals in advance, and I know where to recognize them. But the exits are still something I need to work on, and it's something that is my main focus when it comes to maximizing profits. However, that's it's all work in progress. It's simple as that. You never stop learning. You never stop developing. Like I always say, it's always the search for more. It's the search for growth, and that's also what gives your life meaning, in my opinion. And the thing is, many people are. I sent an audio message with regards to this yesterday in the mentorship forum because there was someone who took a wonderful trade, like really nice low resistance liquidity run in advance of CPI. So yesterday during the PM session, and the market expanded a lot during the afternoon session. And he basically asked me what I thought of his exits, and I literally said to him, "Mate, it was the day prior to CPI, and I personally did not anticipate such an expansion during the afternoon session, and you really managed to pull that off." Let me see. I'm just monitoring this. Monitoring to see how we will react off the previous cycle high. Before I continue my story. If we would break through it aggressively, then we might see that run towards that buy side liquidity pool that I have annotated. However, I was too focused on chatting with you. I'm just monitoring to see how the market react of this very small BC here that got created. Because I'm not a fan of the time at which that high was taken out. This is of course a regular partial, by the way, if you would not have taken partials earlier. Like I said, due to the size of this position yet, or still, this is how I'm managing it. And I'm now specifically looking at this candle, how it's going to deliver. I do not want to see a high creation right here if we would continue to the upside. Why? Because we've traded above 550 So therefore, if we are going to see speed and velocity to the upside, it would have to come rather soon now. I'm monitoring every single candle by the way, and this is something a skill set that I've developed over time. And once you're in sync with IBDA, once you are able to really read every single candle because you know that high frequency trading algorithms are currently active, then that's a very beautiful thing to do. However, you need to understand when you can do that and when you can't, and that's a skill set that you will have to learn over time. However, so far all good. It just has to displace a bit more to the upside, and then I would be rather interesting to see. The high that I'm targeting, by the way, at final high, it's the April high. I didn't mention that just yet, but we're currently in May. So what highs and lows does May refer to? It refers back to the previous month's highs and low. And I was telling you a story, by the way. So let me just please continue with that. The story that I was telling you was about, someone who took a wonderful trade yesterday, and he said he took partials rather early. And the reason why he said that was because he took partials at good liquidity pools, but the market expanded way beyond his liquidity pools. So what I basically said to him is the following. I said to him, well, brother, look at it this way. You recognized it was the day prior to CPI. You recognized that the market could potentially chop around and just consolidate, just basically deliver in an ugly manner, and that would be that. And my stop can be trailed aggressively now, by the way, because I never want to see the market trade below that previous cycle high again. But anyhow, I said to him, you recognized that the market, let me just put it a bit below it here, like that. You recognized that the market chopped around and that it was maybe going to continue that chop during the afternoon session, simply due to the fact that it was the day prior to CPI, and we might see the market just stay inside of a range, and that would be that. However, he saw a nice long opportunity and he went long. So what he did was he basically took profits at the buy side liquidity pools that were present during the launch cycle. So he took his profits and the market expanded way beyond that. And what I said to him was the following. I said to him, look, in hindsight, it's very easy to beat yourself up. It's very easy to say, for example, in this case, I took partials here and the market still ran towards the buy side liquidity objective, the previous cycle high. Do you think I beat myself up because I took partials right here? No, because I recognized signs that we might not see the market reach that previous cycle high. Does it make me a bad trader now that we've delivered it? Hell no. It shows that I'm flexible. It shows that I'm able to basically recognize during the environment, whether or not things are changing. And it's a skill set that one has to develop. For example, do you think this displacement below the CB was clean? Hell no, it was not. So that's why I took a partial. Does that mean I missed? No, because I exited in a profit. And that's the way you need to look at it. I'm not looking at, oh, look, I could have held onto this contract and took a partial here, and that would be that. Of course I could. However, I'm just looking to see what I can take from the market, what the market is giving me. And that's how I'm viewing these markets. In hindsight, everything is easier. But the skill is to be able to do it live and to be able to say, okay, this is what I'm anticipating now. This is what I'm looking for. And that's it. Let's see if they will have the speed to deliver towards the April high. So far, it's looking interesting, in my opinion. I do not want to see an SMT be set up here. I do not want to see our time of interest be caused for a reversal to occur. Just going to check what Dow Jones is doing. Yeah, the Dow Jones is still below the previous cycle high, whilst the Nasdaq and ES are already way above it. Dixie is also above the previous cycle low. However, I'm liking this order flow so far on Nasdaq. And I'm looking how far I can skim this cat, so to say. Meaning I'm trying to hold on to this one contract as long as possible, as long as the order flow is still on my side. Yeah, as long as the market doesn't displace below this low, I'm anticipating that we're going to see that run higher maybe still occur. So that's why I'm monitoring actively if we're going to see that continuation occur. At this point, I don't really care anymore because it's either going to offer, let's say, another 1400 bucks, or it's going to take me out at 1000 in profit. It's like, who cares at that stage, you know? So, yeah, just gotta wait. It would be very sweet though if they would run it all the way towards the April high during this run, because it would be absolutely textbook PXH PXL theory when it comes to the time cycles and the respective previous monthly highs being very important during the current time window. So far, ES and Nasdaq are moving in sync. Enjoying that. I like that. Pay attention to the price. We're nearing in on the 75 level of the current range. Might be something to be aware about. And you might be wondering, why is your take profit at the April high and not at the 600 level? Because that would be the range high, correct? Yes, that's correct. However, notice that the liquidity pool is above the range high, and therefore I'm monitoring to see if we will reach that liquidity pool instead of just stopping at the price level. Mm, mm, mm. I apologize if I'm not talking that much, but there isn't much to discuss, guys. Like, at this point, like I mentioned, it's either it's going to take me out at a big profit, or it's going to take me out at the trailed partial, which would have been a partial in the first place. You get me? Because the previous cycle high would of course been a partial, or even a full close for some of you. I know that some of you probably closed full there, and that's completely fine because it is a beautiful run. Just take a look at this. If you would, let me just take a look. You would have bought here. Well, isn't this a large enough of a range to you? Of course it is. So it's like, and the way I'm managing this, of course, I took already two contracts off here. Do I regret doing so? No, I do not. Why not? Because I recognize signs of, okay, maybe we're going to be stuck inside of this range. And that's just the way I view that. Like, you heard me analyze it live. You heard me say live, okay, this is something I'm monitoring. This is something I'm looking at. So, like, that's also a way you should journal. You should never journaling in a negative way. Always journal in a positive way. Never beat yourself down when you're journaling. You only worsen the experience that you have then. Always speak positively. It's that simple. And because you're speaking positively to yourself and to the people around you, you'll get more positivity thrown at you. But honestly, the range between this high to this target, I would not be surprised. Let's say it like that. As long as we do not displace to the downside, it's completely valid, and that's also why my stop is where it's at. And we're just going to see if it's going to deliver or not. Good recognition on the 10 to 11 hour being up close, by the way. It's of course where this whole analysis started. I hope that my recording is all well. I hope that nothing got out or something. At this point, it's just a waiting game, and it's that simple. My stop can even be drawn towards this row, because that row should never be violated if we're going to see higher prices. By the way, please let me know if you enjoyed this lecture already. Like, please tell me if you want to see more of this, first of all. I'm very excited to expand this series. I think it's a very good series to really give you an insight in just my analysis whilst I'm doing things. Of course, the way that I've so far been teaching you has done very well for some of you. It has, I would say it hasn't overshot my expectations, but I'm really impressed by the fact that some of you have really turned into beasts over the past. What has it been? Um, we're now, damn, it has already been around 5 months now. 5 months, I believe, 5 to 6 months since the start of the mentorship. And man, it has just been one hell of a journey to see some of you develop. And if you're not there yet at the level of, oh, I've watched through the model series, I'm now getting access to this series, just keep going. It's as simple as that. Just take your time to get to that level, and that's it. Simple as It's as simple as that. Don't try to rush the process. Don't try and get there too fast. You just mind your own business, and eventually things will begin to click. And when they begin to click, they will click rapidly, and that's when massive growth will take place. I'm just going to zoom out. Because, again, want to state this was all an execution on a live account with M Futures. M Futures being a US regulated broker. And what I would just want you to understand is that when you see someone execute and the execution tools look like this, then it's possible that they're either paper trading. However, be aware of the fact that they could also be live trading because, like I mentioned before, the interfaces are the same, the user interfaces. And that's just something to be mindful of. And it was actually funny because when I read through the comments on my latest YouTube lecture, a lot of people say, "Oh, all paper trading, show me live execution." All those people, like, it's hilarious to read to me because I'm like, the thing that those people don't understand is the fact that it doesn't matter if it's paper trading or live. It doesn't matter if it's a demo or live execution. At the end of the day, what matters is being able to consistently call the market, saying, okay, the market is going to reach towards this level. It's going to reach towards this price level. This is the move from point A to point B. And even though I'm showcasing a live execution now, again, I'm not a financial advisor. I'm not telling you to go out there and make any financial decisions. Everything that was showcased during this lecture is simply my opinion. It's as simple as that. I'm not telling you to buy and sell stock. I'm not telling you to go out there and trade for yourself. Trading futures carries along a huge level of risk, and it's something that I do not suggest anyone to take on. First of all, it has to be your own decision when you decide to get into this world. And this is, of course, also part of the terms of services and the agreements that you have signed when you sign up for my mentorship. So that's something I really just want to reinstate towards the end of this recording. I'm not too sure how long it will last. I have a meeting outdoors in about 20 minutes. So let's see if the market will deliver prior to that. So I gotta cut this recording at 20 minutes. So let's see if it will deliver or if it will not deliver.